hell are we talking about today?
I don't know. How did we meet each other? Like everything else, like in life, right? LinkedIn, right? Yeah.
Yep.
Yeah.
LinkedIn's been a great connection tool for me. Marketing, sales connections. I mean, so you just moved down to Naples a month ago?
It's coming up on a month, a couple days from now, I think. Yeah. I got in my car from Oklahoma. I just couldn't do another winter in Oklahoma. Lost my dad in July. I was like, all right, mom's settled. And I packed all my stuff in a big 26-foot U-Haul and put my car on the back of a trailer and started driving, man. And sight unseen, had no place to live either.
So what was it like transferring your business down here?
Yeah, it's a good question. I've done it before, so I did it in Miami when I moved in 2014. So I have kind of experience like relocating, and one thing about me that I've always really just, I guess, been prideful about is I'm a big believer of like just going out and exploring other cultures and other countries. So I've been to 50 countries and all 7 continents. And so I think I'm like a nomad at heart, like I need to go explore and see other things. And so moving to another place, and I'm honestly restarting my life for the 3rd time. So this time is kind of like I'm way better at it, I found, than the first 30 days or 20 days, whatever I'm here. Like I know what to do and how to react and the blueprint on how to build this out. So, but I will say that I didn't realize just the residual effect of the hurricane, right? And
dude, it's been huge down here.
It has, right? And just like I bought another cell phone, like a 239 number. It's no reception. Mm-hmm. Like, so I had to get a landline. So it's been great. Like the weather, every single day I'm out there trying to start my life over. It's like been perfect weather, but I'm not making a lot of progress.
Yeah.
So that's been a little challenge. But
well, so can you tell me? Let's go through just so people know, like, what is the business that you're in? What do you do? And then let's dive into a bunch of stuff, because I want to talk to you about the value of building a company that you can sell.
Love it.
All that kind of stuff, because those are things that I'm trying to figure out now.
Cool. Yeah, so very quick background on me. I was born and raised in a very small town in Oklahoma called Sand Springs, which is about 20 miles west of Tulsa. And which is 1 million people. So it's a bedroom community, but loved growing up in the Midwest. I like Midwestern people. I like people with values and integrity. And
Naples is, Southwest Florida, you take I-75 and it's all Midwestern relocators.
Which is fantastic for me because I lived in Miami for 6 years, and I'm just like, man, Miami would be a great place to live if you didn't have these awful people here.
Yeah. And there are all the people that are from where I'm from. I grew up on Long Island. And it's Fort Lauderdale,
right?
West Palm,
right? Or just all the other countries in the world who are taking their trash to Miami. You know what I mean? So there's that. But yeah, so I just grew up playing sports my whole life, and every single sport possible. Swimming, golf, soccer, football, track, whatever. So, actually kind of a sidebar real quick is my uncle was the number 1 scout for the Marlins, Miami Marlins, for about 17 years. So his name's Stan Meek, and he run their entire scouting for about 17 years. So, I grew up in a baseball family originally, but kind of had to go, other sports. But so long story short, I went to OU. I graduated with an international business degree, and then I went to work for my dad. And my dad had a life insurance and annuity, long-term care, disability insurance brokerage. And so for the people who don't know what that is, instead of going out and working with the client who actually buys the insurance, we work directly with the advisor, the agent. And so we're wholesalers, so we're between the advisor and the company.
Okay.
Yeah. And so so my job was to go out and go build relationships with these kind of advisors. And I did that for about 6 or 7 years, and recruited a couple hundred agents. And then I came across this book called Becoming Your Own Banker. And this book's written by Nelson Nash, and it's just this little 92-page book. And it changed my life. It changed my paradigm on insurance and banking and finance and real estate and investment and how you run your company. And it's just this incredible little, manuscript of this guy's life and his knowledge. And so after I read that, I told my father that I was going to take a sabbatical from the company and just go follow this guy. And he had a 2-day seminar that he did all over the country, and I would literally fly all over the country and just listen to this guy, because I couldn't tell if he was a genius or if he was just an idiot. And the person is literally like shocking my mind. And so it turned out he was a genius. And
you don't know if you're following like a cult leader or if he's got the keys to the universe type thing.
Have you guys seen The Vow on HBO Max?
No.
Okay, yeah. So talking about a genius, and then he ended up being an awful person. But anyway, Nelson was he was 88 when I met him. He died when he was 95, and just an incredible human being first, but also just a brilliant person and thinker. So after I learned that, I decided that I wanted to spin off a company outside of my father's and kind of create my own path. And that's when I moved to Miami and was working primarily with real estate investors and business, large businesses around this concept called privatized banking. So that was kind of my foray into the business world.
Okay. I want to dig into this privatized banking and what was in that book, but you use the word paradigm. Why do you use that word?
Well, it's a total shift in your thinking, right? You're seeing the world from one space, and then you're not seeing it now you're seeing it from a totally different one. And anyone who's read the book 7 Habits of Highly Effective People, right, with Covey, he uses that word a lot in his book. And it changed my entire paradigm on how I saw the industry, how I saw life insurance, how I saw how it should be positioned and how it should be utilized and how it should be taught. And ultimately, what's the value proposition when you go in and teach the public around how to buy life insurance and how to use it. So
all right. So you had a paradigm shift in terms of how you saw everything, but how did you internalize that, and then how did you kind of apply that to what you were actually doing? How did that impact the way you were acting and behaving?
Yeah.
And, how did that impact how you, I guess, started a new business, obviously, but what were some of the ways that you actually literally incorporated it?
Cool. So first of all, I think when you start to become a contrarian in nature in your industry, where everyone is doing business a certain way, and then you meet somebody who says, more or less, this entire $100 billion, or that might not even be a $1 trillion industry, is not doing it the correct way, right? That's a big, holy shit moment, right? It's where you have to be wow. So that was kind of the nature of how I was starting to understand the power of this person. But what I did is practically I took the knowledge that I learned from it, and I went to Miami, and I specifically was teaching real estate investors. So I niched into a niche. Okay. And I taught real estate investors how to use this very specific type of life insurance that the biggest banks and corporations buy in the world. So most people don't realize that the biggest banks and corporations in the world are the biggest purchasers of life insurance. They even have their own name, which is called BOLI, bank-owned life insurance, or COLI, corporate-owned life insurance. And these accounts are not designed like the public buys them, or individuals buy life insurance. They're designed totally different, and then more importantly, they're utilized very differently. So I took this account that the smartest, biggest corporate or biggest financial institutions in the history of the world were using strategically, and I took that to the real estate finance market. And so I was teaching real estate investors and developers and builders and people with large real estate portfolios how to use this as a way to finance real estate, and that's an interesting conversation.
So these are people, and these are larger sums of money. This is pretty big. I'll say big money for a lack of a better term, but
okay.
They're trying to. These are huge projects, where you'd have maybe you'd have to find other means of financing it by, I don't know, raising money or taking out loans, and then this was an alternative to doing that, or like in tandem?
It's not an alternative. It's a complementary or supplementary strategy to using the debt financing that banks provide, right? So so normally a bank will loan you 70 to 80% loan to value. So round numbers, if you're trying to do like a commercial property for 10 million bucks and put 7 or 8 different condos on it or whatever, they'll loan you 7 or 8 million of that 10 million, right? But then you have to come up with the equity, with the down payment, right? And normally for that, how people think of that is that they just take money from an account and they withdraw it from a checking account or savings account or money market account or whatever, and then they literally put that money in the property, right? And so what most real estate investors don't understand about that is that money is no longer earning interest. It's dead capital until you sell the property, right? So the alternative way to think about the strategy I teach is, instead of putting your own capital inside of the property, then what you can do is you can put it in an insurance policy or structure instead, and then ask the life insurance company to loan money against the money that you have in the insurance, your equity inside the insurance. And so think about what banks do, right? So banks don't never loan their own money, right? What do banks do? They loan the deposits, right? So banks will have people deposit money in their bank. They'll pay them 1 or 2% or maybe 2.5% in today's world, and it's taxable. And then they'll take that money and then they'll go loan money for cars or houses or credit cards, and they'll make a spread, right? And a spread is usually what we call yield in finance. It's a lot more than the average person understands. So if, for example, I pay you 2%, right? And then I go out and loan a car at 6%. Most people, their financial education will tell them that that's a 4% return, right? 2 to 6, right? Because we subtract it. But in reality, if you understand how interest rates work, it's actually a 200% return, right? Another way to say that is, if you were compounding money at 2% over 10 years, and then you compounded money at 6% over 2 years, the account at 6 would be 200% more than the account at 2.
Okay.
Or if I sold you a hammer for 2 and then you sold it to your friend at 6, did you make a 4% return or a 200% return?
Got it. I see what you're saying.
Okay. So banks use this concept called velocity of money. And velocity of money is the exact same idea as if you owned a restaurant and you were trying to turn the tables as quick as possible, right? Because if you turn them 4 times, you get a certain profit. But if you turn them 9 times, you get a lot more profit, right?
Yeah.
So what banks do is they're just the art of the middleman, right? They put themselves in that middle of that transaction. And so back to the original thing about financing real estate with life insurance, instead of putting your own money in the property, you can put the insurance company's money. And so let's say the insurance company's money is 5%, right? And that's more or less the number. You can take that 5%, or you'll pay that insurance company the 5%, but hopefully your real estate investment is making 15 or 20%, right? And so the spread on paying the insurance company 5 and making 15 or 20, well, that's leverage, right? And that's what all real estate investors try and do. So
is it 5% of the entire thing or 5% of that difference? So if the bank gives you, let's just say,
you mean the insurance company?
Like if the bank gives you the $8 million of the 10, so you've got that covered in the loan, but now you have to pay, you've got a $2 million spread. Then you go to the insurance company to help bridge that gap. So you're still making money on this $2 million. So when you say 5%, is that 5% of 2 million or 5% of 10 million?
So yeah, good point. Good point to make sure that we isolate. There's 2 different loans going on.
Yeah.
There's a loan that's from the bank, right? And then there's a loan from the insurance company, right? And so if you talk to any savvy real estate investor, they're trying to find a strategy to get 100% financing, okay? And most real estate investors, when I say most, probably like 90%, have never even considered how to get 100% because they don't think it's possible, right? So what we're talking about is really an exercise in imagination and creativity, which we're looking at another financial institution that is willing to leverage your cash, right?
Okay.
And real estate investors don't know how to do that. So the math boils down to, if 80% leverage makes you, 15 or 20%, right? 100 makes you a lot more, because once you're only earning 80 or earning 15% on the 80, you're probably earning, it could be 30 or 40 on 100.
So if like a financial institution were to offer 100% financing to these real estate developers or investors,
right,
they could charge a higher interest rate because they're kind of essentially taking on all of the risk in one.
And they would never do that, because they're the only way banks will finance real estate is to know that if you default, that we have a lot more value in the actual property than what we loaned you the money, so we can turn around and resell it.
So
right?
So a bank might look at the property itself, and that's where they may draw the line in terms of the percentage that they'll offer. So if you're
exactly.
like, I'm developing something, we won't use Miami Beach because those numbers are probably crazy stupid. But like,
right,
if I've got a plot of land and I know that this plot of land is $2 or $3 million and the project or the loan is $10 million, I might loan the 8 and collect the 2 up front type thing, or like 1.5 up front. So we know that, hey, if this doesn't go through, we're not sunk.
The down payment is the collateral, right?
Okay.
So every time you make a down payment, a round number, $1 million home, they're always going to want you to put 20% down, because if you didn't, and then you just backed out, now they have no legal recourse. Now they're in a winnable position either way, right? Banks are always going to be in a position where they win either way. They hate when you decide that the property is recoursed and actually they have to default on it, because they're not in the real estate business, they're in the banking business. And so that's why you start to see sometimes in the secondary market where investors can get really good deals on properties because the bank has now foreclosed on them, right?
And they don't really know they don't necessarily know what to do with them, as well as
no, they know what to do with them.
Okay.
The fact is that they want that cash back so they can reloan it out again, because the quicker that they can loan the money, the quicker that they can get payments back, the quicker that they can reloan the money. So if you look at a bank, they try and velocitize one loan 5 to 6 times in a year. So they're trying to get that original dollar out and back in 5 times in 12 months.
What do you mean velocitize it 5 or 6 times?
So
in a year?
so if I was a banker and I loaned you a loan and you started making payments back, I want to take that payment back again with additional capital and loan it to another person. And we want to do that 5 or 6 times every 2 months. We want to make a loan, because the more money that I have in motion, the more profit that I have for the bank.
Okay. And that's where the velocity comes in, because as you take the money that comes back in, you can make other loans, which then open you up to that additional
profit,
5, 10, 15% interest that you've got on whatever thing you're loaning out.
5 or 10% spread. But right now banks, everyone doesn't understand this, but because it's counterintuitive. But banks make more money when interest rates are low than high. And yeah, it's a pause, right? So the average bank the last probably 7 or 8 years is probably working on a 2,000 to 3,000% profit, and that's why you go to any place in the world, banks are the nicest buildings in the nicest neighborhood with their nicest real estate. And there's a reason why that is, and that's because when you truly understand the business model of a bank and how banks make money and their cash flow position and the financial and economic principles that run this bank, that's what I teach my clients, right? So we do that under the structure of life insurance, but we're ultimately creating our own bank, and we're ultimately using the same principles that bankers use, but in life insurance and real estate portfolios.
Okay. So then going back to that additional, let's just say $2 million to bridge that gap. So
Okay.
how do you use life insurance to bridge that gap?
Okay.
I know you gave the high level.
Yep.
But
Let's go in.
Cool.
Let's go in. So instead of writing a check to the bank for $2 million, hopefully you met me and you know a little bit earlier from the transaction, and I would say, okay, instead of putting in this $2 million into this life insurance, we're going to have to structure it where maybe we put in, you know, 700,000 or 800,000 over the course of a year, 2 years, 3 years, something like that. The reason that we can't put all the money in life insurance as fast as possible is because in the late 80s, there was super rich, super sophisticated people who understood what I'm talking about right now, and were putting unlimited amounts in life insurance, and they were using it as a tax structure. So the money grows tax-free. When you die, it passes to your heirs tax-free, and you never have to pay tax on the growth, which the government doesn't like that at all.
Sure.
Right? So they changed the rules, and they created this contract or this regulation. It's an IRS regulation called the Modified Endowment Contract. And basically what that means in a nutshell is that if you put too much money in life insurance too quickly, then we're going to tax you like an investment. And so we have to layer the amount of money, whatever principal that you have, in this case $2 million, we have to put that over the course of a couple of years so we can walk right up to that line without turning it into a mech. So we have all the tax growth or tax freedom of what life insurance is. So, you know, in your example, in a perfect world, let's say we already have the $2 million sitting in the insurance policy, then you would just call the insurance carrier and say, I want a loan. And they look at your account and they will loan you 100% against whatever you have in your account. And that takes, 3 or 4 business days to actually become liquid in your account. And then the mechanics of this are really interesting, Chris. So let me kind of explain this. So they'll loan you the cash, right? And then what the mechanics of it are actually that money will actually come out of the general account of the insurance company. So it doesn't actually come out of your account like you withdrew the money.
So that's why so in that way you're still making interest that's on your account.
On your policy. That's right.
And so the insurance company is actually acting basically in the same way that a bank would.
Exactly. There you go.
So why would the insurance company do that?
Because they're charging you interest on that money.
Oh, so they give you the $2 million, and then like you said, let's say it's 5% or something like that.
Let's say it's 5.
And you anticipate making 15% on the $10 million.
No, in the real estate, let's say you're going to make 15, but in the insurance, let's say you're going to make 6. It's going to say that you're going to make 6. So you paid the insurance company 5, but you made 6 on the actual return inside the life insurance.
Got it. So you're playing within the insurance policy and the return you're going to get on that. You're not playing against the real world kind of value of the property or the building itself or whatever that's going to make.
You're playing in both. You're playing in both. I mean, the mechanics of taking the loan from the insurance company is if you can pay an institution 5 but earn 6, most people say that's 1%. It's a 1% yield, which is a 15% return. That's another conversation.
Okay.
That's down the rabbit hole. But ultimately, you're also getting that spread between 5 and 6, and you're also getting the difference between 5 and what the property is making, which is let's say in this 15. So you're making 200% from the insurance company's money to put it in the real estate return, and you're making 15% on the transaction with the insurance company. So you're making 2 returns, right?
Okay.
And so most investors have never thought about how to do what I just described, period.
Yeah, because I didn't even know that insurance companies did anything like that? Like, I never would have thought an insurance company would act as a bank, basically.
Well, but they don't act as a bank until you understand banking principles. And ultimately what the power of the life insurance policy is they have a guaranteed line of credit and a guaranteed loan provision in your contract that if you have a certain amount of money, they have to loan you the money. There's not a credit score. There's not going in there saying, I have to qualify for this loan. This doesn't go on. That nobody knows. It's a private loan. It's asset protected. It's creditor protected.
And that's in your insurance policy?
In your insurance policy. Yeah.
And is that like a legal thing? Like, that's a law that it has to be in an insurance policy?
No, those are just benefits of a life insurance policy.
Oh, okay.
All right. So like when you buy a Tesla and they come with you and they say, we want, X, Y, Z, ABC, all these little bells and whistles of what that car is that differentiates us. What a life insurance company is saying, instead of having your money parked in a bank or a CD or money market, we're going to give you a much better return on your liquidity, but we're also going to give you all these other benefits, right? And the public doesn't know these benefits.
So that's where the life insurance part comes in, because it's not a standard policy, but it's one of those policies where it's investing those funds that are in that life insurance policy, right? That's where the estimated 6% return kind of comes into play. And so they're going to lend that $2 million over however long it needs to be. You're paying 5% interest on that. So although it's like a 1% different yield,
right?
Over time, like that 1% difference compounds over the life of that loan. So how long are these loans usually? Like 5 or 10 years?
That's the great question. So here's something that's going to really blow people's mind, which is the life insurance company will give you that $2 million. And it's a lien, right? It's basically a lien against your equity in your account. But they don't tell you when to pay it back. So there is no other loan out there in finance, period, that will give you an unstructured payment back as a way for you to pay it back. So the reason that they will give you no payment schedule, like obviously when you go on a bank, they're going to give you a payment schedule, an amortization schedule, and you got to make a monthly payment. Life insurance companies do not give you a monthly payment back. And the reason they do that is because they have the death benefit there as collateral. So if you, in our example, let's say that this person had $2 million of cash value, but they had $9 million of death benefit, right? So if that person just takes that $2 million loan and goes and puts it in that property and never pays it back, the insurance company just starts to put 5% on that $2 million in perpetuity, and it just grows and grows and grows and grows.
And so if you don't pay it back and that thing grows over time, that comes out of
the death benefit net. So let's say that $2 million over 20 years went to $4 million or whatever. Then your the death benefit grows too. So that's pretty cool. But let's say it went to 10 million. So they would say, okay, now after 30 years of this loan, you're going to pay us back and we're going to get paid on that. So instead of paying you 9 million, we're going to take that that loan of now, which has grown to 4 million, and we're going to subtract it against 10, and we're going to pay your heirs six tax free.
Wow. Okay. So it's like, oh my God. Yeah. So they have
powerful.
They have a pretty solid position there.
They can't lose. They can't lose. Yeah. They're in a no loss position, which is why they'll allow you to let that interest accrue.
And so did you learn this from that book?
This is that book, but then I went down a rabbit hole of a year to figure out all this and to figure out how to really apply it to real estate. Because I think I've looked at a lot of different ways to apply this, and I think big businesses that sit on a lot of cash, that are cash rich and asset poor, that have a lot of money coming in that they don't know what to do with. and they usually park it at banks because they don't know another alternative. That's really powerful for business owners, especially if they go out and they buy like big pieces of equipment or large capital purchases, etc. This idea is really powerful too. But ultimately, I think the most powerful way to apply these principles is through real estate finance. Yeah.
Okay. Because and why is that?
Well, because real estate is most real estate investors, I like to work with real estate investors because they're much smarter than the average person when it comes to just their financial education and their sophistication. And if you look at a lot of real estate investors, they primarily don't work with financial advisors because ultimately they're like, I can get 17, 20 by myself. I don't need you to put money in the market for me. And so they already have a really solid business model. And my expertise is just kind of like putting a chip into a Lamborghini, right? Like you already got a damn good car.
Yeah.
Like I'm just going to supercharge it for you. And we're going to make a couple little small tweaks here and there. And just to get an understanding about how you finance properties and how you hold mortgages and your philosophy around debt. But ultimately, we're going to supercharge what you've already built.
Sweet. Dude, what is this book called?
It's called Becoming Your Own Banker. And then there's another one out there called, which is one of my mentors in the business, Kim Butler, who was Robert Kiyosaki's advisor for quite a long year.
Okay.
Is called Busting the Real Estate Investing Lies.
Okay.
And some of your listeners want a copy of these books. I'd be happy to give them to them. I've got hundreds of copies of these books, but let's figure out a way to qualify them and make sure we give the right person the right book. But I mean $10 for someone's financial education who's actually really interested in learning this stuff is we can do that all day.
Yeah, for sure. Hell yeah. Well, I might take you up on one of those.
Yeah. I got them in my car. Let's go.
All right. Hell yeah. Sweet. Okay. Yeah, because these are things that I would like to know about because I'm not quite there. Well, I'm definitely not quite there yet, but yet keyword. But
yeah, right.
So some of these, I guess this is probably a good segue into something that we were just talking about before.
Cool.
You sent me over the idea, and funny enough, actually, I think when you sent me the email for some of the things that we could talk about on here, one of them being like people building a company that's not valuable to sell,
right.
Or they're working in it for a long time, and they realize when they go to sell it that it's not actually valuable. It's always something that you kind of think about every once in a while you're starting, but it's something that, man, I've heard it a bunch of times lately,
right? And
it seems like it would be a huge like life slap in the face for that to happen to you, and I want to avoid it. And
that's a really nice way of saying your entire hopes and dreams and business equity and sweat and all of that of 40 years is a failure.
Yeah, and
that's a really nice way of saying that.
And it hasn't set you up to be able to leave like effectively.
That's right.
And I want to avoid that. And
cool.
A lot of we just filmed something with another company that they are advisors that help business owners avoid that trap because she fell into that trap too. And it's now something I'm hearing over and over again.
Yep.
And now I'm talking to different business owners that have things structured a certain way.
Right.
So I'm curious to know what your thoughts are on this.
Yeah.
And why was this something that you wanted to talk about?
Well, I think, I came back into brokerage once my father passed. It was this really emotional thing for me about carrying on his legacy, and I wanted to make sure that I carried the torch forward. And so I've lived this, right? So I have a testimonial to this. And
how so?
Well, I realized that a tremendous amount of business owners out there have lifestyle businesses, right? Mm-hmm. And a lifestyle business is a really cool thing, right? Like I grew up in a very successful lifestyle business. Like I grew up in a small town in Oklahoma, but we were, my dad was at every baseball game. He was at every basketball practice, and he had time freedom, right? And I think which is what we all as entrepreneurs want ultimately is, yes, we want a good income, but ultimately we really want to, own our own schedule and own our own time and be able to take a 10-day vacation and those kind of things that are quality of life. And so I didn't realize that I grew up in a lifestyle business. And before I decided to take my dad's company over, we tried to sell it. And all of a sudden, like, the reality of what exit planning is and what value acceleration is, and then what CPAs call enterprise value, which is, do you have a strategic asset that strategic buyers want to buy and that will give you a large multiple of revenue or EBITDA or profit that you can turnkey say, this thing has been built systematically and proactively to where I can just sell it, is about 5% of the market, right? So you've got 95% of our businesses that have been built the wrong way, right? And I lived it because I tried to sell my dad's company, and it was like, nope. Like I'll give you two examples. So during the pandemic, I started. I wanted to. I'm not somebody that sits well or sits idle well, right?
Yeah.
And so I'm a learner. I always like to be learning, and so I decided to kind of learn a new skill, which was this thing called value acceleration. And I went through a process. A guy named John Warlow out of Toronto. He's written Built to Sell and The Automatic Customer and another one. But I think he'd exited 8 companies, right? And so he obviously is an expert at the space. And so he had this kind of software as a system,
software as a service.
You got it.
Yeah.
Yep, that one, called the Value Builder System. And I went like just down the rabbit hole, like 400 hours of training on this platform. And what I realized is, like, there are, some services say there's 8 drivers. Other services that I've come across say there's 11. But ultimately, there are specific things that you can look at in a business where if you do not have them built, then you're in trouble, right? From a valuation perspective and from a market perspective. So I'll give you 2.
Yeah.
Which is, the big one I see almost all the time is that without the actual CEO or the founder or the person who built it, if you take them out of there, the valuation of the company goes down 30 or 40%, just like that, because they're the company. Effectively, it's their goodwill, it's their relationships, it's their expertise, it's their leadership, right? And without them in that, there's a void, so that's one. And then I also see one where, and this happened in our business, and so I've lived this, is that my father, he'd built an agency over his 40 years in the business we had a couple hundred clients. And then I left and started my own company, and there was nobody there to bring in or recruit new agents. And so it's kind of like in football, you always got to have really elite clients coming in every year, or advisors coming in, or recruits coming in. And ultimately, if you don't, then, it's going to start to erode, right?
Yeah.
As a business owner, I'm sure you believe that, right? Like you're growing or dying, right?
Yeah, and I'm still, so that the reason why I ask these kind of questions too is as I'm pretty early on. Like, I started this business really full tilt and boogie a year ago, but I started it full like a year and a half ago. So I look at these different things, and you find success, and then all of a sudden you realize, well, there's a big wall here that's not worth breaking through, and I will go broke before I can break through this. So let me go here.
That's a plateau.
I made more money here, but again, there's another wall, and then it's just like you keep kind of moving, and now we're starting to get in the sweet spot. So now I'm kind of in this spot where it's like, all right, I see a clear path forward. It seems like there's a long way before I hit that next plateau.
Right.
Let me see what I can set up correctly here. So I, in theory, agree with you. I haven't experienced it yet, but based on every successful person I've talked to who's gone through this and done it, always talks about this, and that's why I'm like,
yes,
let me try to get out of my own way on this one.
There's a book called Scaling Up that I'd highly recommend reading. Scaling Up, yeah.
Okay.
And but what I was going to say was, we had 200 agents, and then by the time I got back in the business, we had like 70, and then we really had 7 to 10 that were really the business, right?
Yeah.
That were really moving the needle. And so I call this like diversity or concentration risk, right? When your company is too dependent on one supplier or one key employee or one client.
Yep.
And ultimately, when we were trying to sell our company, what these people that were looking at it to buy it is like, we're buying 7 relationships, 8 relationships. And most of these relationships, these people are 65, right? What happens when they retire or die? We don't have a business. And it was a totally valid point, And so anyway, after we tried to sell it unsuccessfully twice, I decided to go down this route, and I think it's, I know this world. I obviously can talk it, but I am not going to be the expert to actually do the work with the business owner. And I think a lot of being almost 20 years in the financial services industry, you realize that you can probably be expert in about 2 things. And that you better have really good experts beside you, to where if you get out of your lane, then you can refer and you can introduce. So I found a company out of Colorado who's done 500 exits with advisors and with business owners.
Okay.
And they're, and so they're my ultimate strategic partner. When I come across a business owner that says, one of my questions is, what's your exit strategy? Do you see yourself in the business in the next 5 years? And if the answer is, I don't see my business here in the next 5 years, then we have enough runway to start doing the work to plan it to get that large multiple upon the sale. And that's what they do. They will come in there and actually do the work with the client.
Got it. But you need that lead time, and you need kind of the mindset of that business owner to be like, all right, I see what I've been doing. I've been running it this way, but I do want to sell it. So you need that kind of willingness.
3 years is a minimum, I think, for most businesses. Yeah. And to your point, what you just said is, man, there's a big delusional gap out there.
Well, you have to be delusional kind of in order to run a business sometimes. You just kind of have to just keep telling yourself yeah, this is the right thing.
This is the right thing.
This is what we're doing.
Yeah.
Because I already tried the self-doubt route, and it just fucking eats you up, man.
It doesn't fucking work, does it?
No, you kind of have to be delusional a little bit.
Yeah. I meant delusional from what they think the business is worth.
Totally.
Right?
I see what you're saying. Yeah. But it's it's two sides.
It's two sides of that. You're right. Yeah. I agree. So most business owners think their business is worth $5 million, and then you have to have that really awkward conversation with them that it's valued at 2, and then there's that gap. And so we try and work with financial advisors around those conversations, because most financial advisors don't have the expertise to talk to business owners about business valuation and understanding that you have a lifestyle business and not an enterprise valued business. And because I don't see how a lot of financial advisors do retirement planning without having these conversations, because most of the time, if not all the time, the business is worth 70 or 80% of their net worth. Right.
Sure.
Right. And so if you're not maximizing the value of the company for an exit, then the business owner has never saved enough money in separate accounts. He's always reinvesting it back in the business. And so now you get to the end of life, or 65 or 70, where these business owners, they really only have 2 options, which is to partially retire and to hire some kind of CFO or whatever, and let them semi-run the company and work 25 hours instead of 50, or they work till they're 80. Right. Those are the 2 options. So that, coming into this, I think the point needs to be made, Chris, where we are coming into the biggest wealth transfer in the history of mankind, right? With these baby boomers. I like to call it the silver tsunami. and a tremendous amount of wealth is actually tied into these businesses, right? And so many of these businesses, unfortunately, like my father's would have had I not stepped in, they're just gonna go away, you know?
Yeah.
So.
Well, yeah, that's kind of a harsh pill to swallow.
Yeah, that might be a good segue for the family enterprise stuff.
Yeah.
If you want to go that direction, because that's kind of my latest venture, and I find it probably the most fast. I know the banking stuff and real estate I think is the coolest idea I've ever come across, but the family enterprise stuff I find extremely fascinating because I'm a product of a family business, and the statistics and just the, it's 12% make it to the third generation, right? Like,
yeah.
I mean, 88% of family businesses don't make it to the grandchild. And let's talk about that. What do you think about that?
Let's do it.
Okay. All right, let's jump in there. What do you think?
Where do we start?
It's great. That's the really good question. Well, I mean, I guess take a step back, and we'll kind of dive into the silver tsunami. I think, like 80% of that wealth, or 75% of that wealth, somewhere around there, and you've seen reports go from $60 trillion to $80 trillion, which is just an incredible amount of money, right?
Yeah. That's the transfer that they're expecting for baby boomers once this generation
all in
dies. But
yeah, it dies. They die. Yeah, they die.
It's holy shit.
Yeah, it's a big number. And you've got 70% to 80% of that wealth is in family business. And so when I understood that,
really,
yeah, because there's only about 17 to 20 of it in retirement accounts, right? So you've got a crazy amount in business, and then most businesses are family held. Most people don't realize that, but it is. But so I wanted to be like the guru of family business, and I went out and searched for it for 3 or 4 years, and I couldn't find it, and it ends up not existing in the United States. So there's these couples, there's a college out of Georgia, and then there's this institute in Chicago, but I wanted to go like really deep, and so I finally found it in this designation in Toronto called the Family Enterprise Exchange. And so it's been the best thing I've ever done. I haven't graduated yet. I'm just about to graduate, but it's going to be a life-changing thing for my career, because ultimately it's going to give me the skill set to engage like very wealthy, multi-generational family businesses and help the family dynamics and the business dynamics and the ownership dynamics. And have you seen that show HBO on Succession on HBO?
No, but
okay.
I've heard about it.
Yeah, so I'm sure for the people who are tuning into this podcast that are Succession fans, they'll probably get exactly what I said right there. But it is that complexity of trying to get the business from a leadership and management perspective to the next generation, and
if they actually want to do it.
If they want to do it, they can sell it, right?
Yeah,
they could sell it, right? But most family businesses, these kids have grown up in affluenza, right?
Yeah.
And why would they ever want to give that family business, that asset away?
It could be. I mean, because like my parents have run a few different businesses, and they sold their last business a couple of years ago.
Okay.
But like a big thing for them is so that way we don't turn out to be fucking pricks.
Assholes.
Yeah.
Yeah,
and
right.
And like that's kind of a big part of the way that they think it, and like they help us on the way, like
sure.
And we've worked for them, and it honestly, working at the last company was one of like the best kind of gifts that I could have been given, because I got thrown into so many situations that I just never would have had the opportunity to do, like just being able to be put in these like really challenging spots of like, hey, you have to go learn this whole section of the software platform. It was a SaaS business, software as a service.
Okay.
And you have to go learn this whole section of the business, like the software, by next week.
Sure.
Because you're flying out to an Air Force base to go train 70 people who are like fighter jet technician, like maintenance.
So sink or swim.
Sink or swim.
Right.
Like, here you go. And it's like,
yeah.
shit. All right. I'm gonna spend 2 hours a day once I'm done working on this stuff, figuring out what these people need, I'm gonna go through their account, so like being
character building.
Yeah, totally. So
Character
like
building.
I'm super thankful for that, but just trying to avoid, like you said, that affluenza is like
It's a real thing, man.
Yeah, and we've gotten, like, I don't have any expectation of getting shit.
Right.
And it's better that way, because, like, you know, when I was in college, before I went and worked for Enterprise, like, you have this weird, like, even if you're not an entitled person,
right,
you do start to develop this weird shit. And then I went and worked for Enterprise, and I wasn't hitting my sales numbers, and, like, you're just on this matrix. You're just a number in a chart.
You're just a person.
And, like, and I wasn't doing it, and I wasn't advancing. And it was, like, that was one of the best lessons I could have gotten, was, like, they don't give a fuck about anything. Right. If I'm not hitting the sales numbers,
right.
It doesn't matter.
You're replaceable.
I'm replaceable. So it's like, let me get my ass in gear.
Yeah.
Let me do this. Let me figure this out. Let me work my way up. Because I always thought growing up, like, I never want to be reliant on that. Even if like, it was a small company, I always wanted to make sure I could do whatever I needed to do for myself.
That's right.
It was like it's not a weird, but it's like a proving yourself kind of thing when you're younger, like anywhere from, like, I don't know, probably 15 even, until, I don't know, maybe 2 years ago or something. You kind of can let that stuff go once you've kind of done enough stuff for yourself. I mean, like, what did you have? Like, I know you had the family business and everything. Yeah. What was that like?
Well, I think, like, what you're saying is that I'm a big believer that, like, parenting, the ultimate parenting, like, goal is have you created independent, and I would even say interdependent children, right? Like, who not only are, you know, because a lot of this affluenza thing is not just the children needing the financial resources, but they haven't created their own purpose. They don't know who they are as people. Yeah. It's the spiritual, it's the other types of capital in their lives that they've never grown, right? And so I read a lot of financial books, and one of the best ones I've ever read was a book called I'm just blanking. Of course I am. Business Secrets from the Bible, and it was written by a rabbi, and I'm not Jewish, but I think there's a tremendous amount of wisdom in ancient Jewish wisdom, and specifically financial. And they said that, you know, like, if a person who grows up in a wealthy family doesn't create their own path, all they do is eat the bread of shame. And that always stuck with me.
That's a golden line, right?
That's powerful,
there.
Right?
Yeah.
It's powerful. They eat the bread of shame. And no matter, like, they, you know, a lot of people that are very wealthy children or second generation, we call them rising generation in family enterprise, who haven't created their own path, like, they self-medicate, right? They can't handle it. Like, they can't handle the shame, right? So that's why you see the drugs and the alcohol and the womanizing and the flying all over and them trying to do stuff. And it's a story as old as time, isn't it? And so, you know, hopefully I'll be able to have. I never had that. I mean, me
neither. Fortunately, I was.
I never had that.
To avoid all that.
You know,
stuff.
I mean, I wrestled with a 3 or 4 kind of year existential crisis in my early to mid 20s, you know, about what the hell I wanted to do with my life.
Sure. Same.
And so but that's not affluenza, right? And so hopefully, you know, that when I work with families and I can have those types of conversations with very rich, entitled children, because somebody needs to have that super direct, honest, frank conversation with these children, because they're just going to wallow and continue to self-medicate and
never know why.
And I put it on the parents. Honestly, it is that's a lack of parenting situation. Like, if you're too busy with your businesses or with your social calendar, whatever, to instill the right values. Something that's really powerful that I've stuck with me in this whole world is that if you don't pass your values before your valuables, then you're in a world of problems.
So that's damn, all these good lines.
Thank you.
So All right, so part of this, so you're helping with all of these.
I've got my hands in all three of this, right? So, so yeah,
you're really helping like the financial side, but it's also it's kind of the mental, the family side of things, like how to plan all this stuff out, because it's not very straightforward. And
right,
especially when you're super successful, a lot of your business bleeds into your life, and you've got to so you're helping like manage and mitigate that stuff. That's your goal with this stuff.
Yeah, exactly. Like I haven't figured out this. What's kind of interesting is like my close to 20 years in the business, it's all coming to a head right now because I built successful companies, but what I really, really want to do is work with family businesses around this family enterprise. But I know so much about life insurance and business consulting that I'm trying to figure out how this family enterprise world, which starts at 20 million and higher net worth and goes to billions, how we create a business model that takes all of my experience. And obviously I've got to go find the right pieces to plug in the right spaces. But I found 2 or 3. I think right now I probably need 3 or 4 more. And so I've just been realistic with myself, Chris, to say, I'm a year away probably from really going to market in a tremendously unique way. But I'm definitely in the right place because Naples is ripe for this kind of work, and I know I have the right team so far. It's just being very picky and choosy about who the right other people are.
Yeah, to both work with, but also like who you can help,
who you can put your clients in front of, right?
Yeah.
I mean, that's the
ultimate
list. Oh, yeah, and that. Right. So I'm gonna build relationships with about 50 advisors here in Naples. I don't need any more than that. And the right 50 that have the right mindset and the right clientele, and just to go much further and deeper with those 50 than just try and do a shotgun approach where I go out and build 200.
Yeah, for sure.
So
yeah, because if you can convey this kind of stuff too to a smaller group of people who are in front of the right people, it's a real force multiplier.
No doubt.
Yeah.
Yeah.
Dude, that's cool. And this is, like you said, third time rebuilding your life kind of, so it's not...
I know, this is the last time, Chris.
Yeah.
This is the absolute last time I'm doing this.
Done with it.
Yeah.
Well, dude, because what you were talking about with traveling and going 7 continents, it's pretty freaking sweet.
Yeah.
Yeah, man. Like when I was, like you said, early on in your first half of your 20s, having like an existential crisis. Like I did a whole road trip around the U.S. I drove literally to almost every state, like from here,
that's awesome.
Texas, Colorado, California, Northwest, across, down.
What kind of vehicle were you in?
Jeep Liberty.
Oh, that's good. That's good stuff. Yeah. Did you sleep in it?
Something at least 5 of those nights.
Okay.
So there was sleeping in.
So you were hauling ass, man.
Yeah, sleeping in the car.
Did you even stay like in a one state for one day or?
Yeah.
For more than, okay.
Yeah. So like I did different stuff, but like I stayed with either cousins, friends, family members, people that I knew. I stayed in hostels, sometimes hotels, campgrounds, slept in my car.
All over the place.
I love it. And just kind of figured it out as I went. I knew I wanted to get to California, and I wanted to do all those things. But going on that road trip was one of like the best things that I could have ever done.
By yourself, right?
By myself.
Yeah.
And I wasn't alone too much, but like it was one of those you're fundamentally alone, but because you're fundamentally alone, you force yourself to, like you said, introspect and also integrate with whatever culture that you're in. And
whatever that you figured out.
You become part of it. Like,
right.
There'd just be times where you're just walking around a city, you meet somebody interesting, and then that's who you're with for the next 12 hours.
That's right.
Like I was walking in, this is actually pretty sweet, but I was walking in Portland, Oregon one time, and I'm just walking down the road, walking past like a restaurant, and some girl just like knocks on the window from inside the restaurant, and
took a left turn.
Come in. And I was like, okay. And then I was hanging out with this girl and like a bunch of her friends.
I love it.
For like
That's what life's about right there.
8
man.
hours and
Yeah.
bar hopping in Portland.
Love
and,
it.
You know, this is before they were throwing fucking Molotov cocktails through bank buildings and stuff.
Right.
But so what
I think
do you like about traveling?
Can I? Yeah. So thanks for that question, but I just wanted to, sorry to cut you off, but I just think that what you just described, man, is like, I think it's one of the coolest things in the world. I mean, hands down, I think that's one of the coolest things in the world people can do is take massively big trips by themselves. I've done 44 days in Africa by myself. I've done 44 days in Eastern Europe by myself. And it takes a special person, man, to be able to be not only enjoy that environment, but thrive in it and be like totally okay with yourself. And most people don't want any part of that, dude. Like none.
Nope.
It sounds like hell to them. You know?
And parts of it kind of are, because you're I don't know if you get this, but like it's like you said, like the introspection where you're there alone and you're like gotta figure out like kind of like who the hell am I?
That's the fundamental question you're trying to answer.
Yeah.
That's why I think we go. I think it's a lot of subconscious thought, right? What you just said, you know, and I'm a people person. I can go walk into any place and sit down and talk to a stranger and I feel very comfortable with it, right? And if you're a super introverted person who doesn't like talking to strangers or doesn't like big crowds or doesn't like that social part, then I respect that and I get that, right? That's just not how you're made, right? But for extroverts who are wild out and out and they're doing well and they're cool and they like that fire that you get when you just get into new cultures and you get into new people and you get into new food and you get into new experiences, then I just love it.
Well, but that said though, like the wild extrovert piece, like if you talk to a lot of those people, they would not be cool to do that 44 days.
Oh, no.
And it is, that's where I don't know if people are introverted or extroverted or if those are just muscles that you learn to flex, because I like being alone. I like being alone by myself.
Right.
But I also like you said,
right,
like being able to go just talk to people. Like I'm so thankful that I have like this business, these podcasts.
Right.
I can have a conversation like this.
Right.
And that you're also pumped to be here, like to
Yeah.
have this conversation. Like that's one of the coolest things.
Me too.
Me.
I feel like that same way, man.
And I like having both. So that's why I almost look at it like
Yeah.
it's nice to have that. It's like a muscle that you
Yeah,
work
I
out.
think that's a good point. I mean, I don't want to cheapen it by saying if you're an introvert or an extrovert, you can't go off on your own trips, right? Like, and clearly lots of introverts travel alone and do these kind of trips or whatever. But I don't think they get the same sense of adventure, or they're not in the type of situations that we would feel comfortable in and growing and meeting people and ultimately, like I bring books, you know, like my downtime is reading and you know, that's my solitary time, right? But I think traveling the world is I mean, I've got wanderlust, man. There's no doubt about it. And it's an insatiable thing. It will never leave me. I'm always going to have it, you know, and my next big trip is, I think I'm going to spend like 30 days in a monastery in Thailand probably and learn Buddhism and I'm a Christian, and I don't see any problem in learning other religions and getting those sense of principles and, you know, and emotional intelligence essentially is what Buddhism is, I think. And so shave my head and eyebrows and let's do 30 days in Vietnam or someplace cool. So
hell yeah, dude.
Yeah.
Dude, I would be pumped.
You're welcome to join, bro. Come on in.
I got a 1-year-old, so
okay.
I'm not sure that I'm gonna get a
if I can sell that to the wife, man, you're going.
All right. I'll do a week at the temple.
Okay. All right. A week. I'm cool with a week. Yeah. Yeah.
Dude, that's cool. So what interests you about doing something like that? Like when you're
it's just getting out of your comfort zone, isn't it? I mean, ultimately how we grow is, you know, human beings they're creatures of habit, right? And what's crazy about habit is that we do something like 50 to 60% of our behavior is habit. Right?
I would even say it might be more.
Be more, yeah. I mean, the information that I've seen through The Power of Habit, that book, he said I think 50 to 60, but we don't even know how many things we do every single day that are out of habit. And I think, we as human beings, we tend to get in these routines that, are comfortable, right? And there's nothing wrong with having a routine. I think routine is an extremely important piece of life, but also I think that you have to realize that you're not growing in that routine. I mean, to a point you are, but you're going to hit, like you said in your business, you're going to hit a plateau, right? And so, are you going to challenge me to think differently, right? This is one of my favorite things I've ever learned, which is if you really want to change your life, you have to learn to think different, you have to learn to feel different, and you have to learn to act different. And I think traveling gives you all of those, right? And
it kind of forces you.
It forces you to do all those, yeah.
Well, and dude, it's that, and it's also finding the balance too of kind of learning how to rebuild a habit and how to rebuild a routine. Because one thing that I've noticed too is being somebody who more has that kind of wanderlust as well. That can fall into your day-to-day routine, and it can actually be somewhat destructive or distracting. Absolutely. From helping you actually build something sustainable, something solid. So it's it's something to be mindful of, but also it is actually a nice thing to go through because it does teach you that skill of knowing that you can fall out of a routine, but you can also get back to one. Totally. And you can build. So it's
self-awareness, right? I mean,
that's the name of the game.
It's the name of the game of everything in life, ultimately the more self-aware you are, the more success you're going to have to be, the better relationships you're going to be, you're going to live more of your potential in life. Ultimately, not to knock on the Midwest, because I'm so glad that I was born and raised there, but I see a lot of very unaware people in the Midwest, and they're great people and they go to church and they're beautiful souls, right? But anytime you give them anything that's don't mess up my little bubble, right? I don't want to think I don't even want to consider thinking like that or taking that trip or doing that. I've got my little way of life here, right? And to me, that's exhausting, and it's you're literally sucking the oxygen out of my life, and I can't live there. I can't live there.
Isn't that kind of one of the most dreadful thoughts that is that that's a possible way to live your life? I could not live my life that Long Island's very much the same way. It's you present something to somebody, they're that's fucking gay, dude.
Right.
What?
Right.
No, it's just what are you talking about? And then, it's just you stay in this.
Right.
view.
But also ignorance is bliss, right?
That's true.
A lot of people, it's one thing if you can't financially ever travel anywhere, then I'm never going to disparage a person because they can't go travel, right? My problem with a lot of those people is that they don't want to travel. They don't want to go get out of their comfort zone. They don't want to go see other places in the world, right?
Yeah.
And to me, that's a totally different animal, right?
Yeah.
Right. And so I agree with you. Small town America, man, it's a beautiful thing, but you also have to realize what you're giving up. And I've been so fortunate to travel and see so much of the world that I come at it from a totally different perspective, right?
But it's cool it's cool to have that perspective, but also live in somewhere that's more of a small town, because being somewhere like Naples or Fort Myers or Estero, all these different places down here, it's you have that knowledge. You can always go travel those places, but it's a nice it's a nice retreat when you know that the world out there is bigger, and you come back to a small town, then you can appreciate all those things.
So true.
Living in a city, once you either you become a city person or you got to get out, because it can eat you alive.
So true. I haven't really found a really bad thing about Southwest Florida yet. Other than do not walk with don't walk in a parking lot without your head on a swivel because 70-year-old grandma is going to hammer you. like the driving in commercial parking lots, dude. I've almost got hit like 3 times in 20 days. Like, I'm like, there's like this, I'm living in heaven. There's all these beautiful things about Southwest Florida. I really enjoy my time here. And then there's this lady like trying to kill me what's up?
No, I mean, he grew up here. I mean, is
this true? Yeah.
Oh, they do call it Heaven's Waiting Room for a reason.
Yeah, long-term care insurance, man. I'll sell you some of that too.
Well, dude, thanks for coming and doing this.
Oh man, this was awesome, bro. I appreciate you having me on. Seriously, thank you.
Well, where can people connect with you?
Sure, I think that the easiest way is just to get me on LinkedIn. You know, Shawn Byerly, SHAWN BYERLY. And just tell me you've heard me on the podcast, and happy to connect.
Cool. Yeah, and I'll include the link there in the show notes and all that stuff. But
cool,
dude. Thanks for coming and doing this. I feel like I just learned a ton of stuff.
Awesome.
And, I'm actually pumped to dig into some of these books.
Yes, let's keep the conversation going. Obviously offline, and I'd love to work with you, man. I'm gonna get some of my best clients on here to do this, and we'll continue this conversation and relationship.
Hell yeah.
I appreciate you having me on.
Dude.
All right, thanks, bro.